Well, unfortunately, there was another warning today that the party may soon be over. Delegates to a Ford breakfast heard that the price of oil is climbing and that may accelerate. Let's talk investment and car sales now with Ford, one of several international car manufacturers operating in South Africa. It released strong results today, but also warned that the lower oil price could affect exports to key markets in sub-Saharan Africa, including Nigeria and Angola. To discuss, we're joined by Ford Motor Company Southern Africa President Jeff Nemeth. Thank you for joining us, Jeff.
Thank you.
So as a country, we desperately need exports. We're importing too much, exporting too little. So when you talk about these markets being affected, is that a significant pullback considering Nigeria and Angola?
Well, interesting that we picked those two countries because actually our sales are weighted more heavily to our exports to Nigeria and Angola than any other countries in sub-Saharan Africa. And we are seeing, with the oil prices declining, while it's almost a boom for South Africa because we're a net oil importer, and so it makes affordability better for consumers. For Nigeria and Angola, since they're a net oil exporter, it actually hurts their fiscus and hurts the ability for sales, because a lot of our sales are to government and to infrastructure companies, and as they have less money to spend on development, then they have less money, they need less product.
And you're selling, I understand, about 30% in Africa itself. So could you see a dramatic fall in sales?
I don't think a dramatic fall is really in the works. Nigeria is still forecasting, they reduced their GDP forecast from 7 to, I think, 5.5 because of the oil prices. So they're still growing, they're still expanding. Angola has long-term plans for infrastructure spending. They've got a lot of international companies in there that have longer-term contracts, and we sell a lot of products to them, to the infrastructure companies. So I don't really see a drop-off in sales. It may be a slower growth than we expected.
And what about South Africa? You're talking about that boon for motorists here. What are you expecting sale-wise this year? What is the industry expecting?
South Africa is kind of interesting because we've got both the affordability because of lower inflation. Interest rates will likely stay lower because of the oil prices and the gasoline prices at the pump, or petrol, as you say here. We expect consumer spending and affordability to be improved, so they're more likely. And also, the improvement in job creation here in South Africa is also giving rise to a better manufacturers and purchasing managers index, better leading indicator from the Fed, and so there's a lot of positive news that's coming out, and that's offset by the rolling blackouts that Eskom has, as well as some of the current account deficits, which are driving a devaluation of the rand. So it's kind of a tale of two factors.
Well, tell me more, because our president went to Davos and said that South Africa is open for business. As a foreign car manufacturer, do you feel positive? You've opened plants before. Are you planning new developments? Are you adopting a wait-and-see approach? How are you feeling right now?
Well, I think the last time we talked, Francis, we talked about the launch of the new Ranger and the major investment we put in to South Africa. And that year, I think we built about 50,000 units. We built 65,000 the year after. We built 75,000 last year. And we're looking to increase that by about another factor of 10,000 this year. So we're continuing to expand our production here in South Africa. Much of that expansion this year will be based on a recovering Europe, better consumer acceptance of our great new products, our Ranger and some of our other products. So we're expanding our production. We don't have any new announcements about investment yet, but if that trend continues, obviously we'll have to expand our plant here. So
it's business as usual, and the power cuts may come and go. That will remain.
Yes, that's as long as we see an improvement factor. Right. Some of the things that have been announced, that we like, is that Eskom has said they're open, potentially to privatization of some of the power grid, and that'll bring more investment in power potentially to South Africa.
Are your operations being affected right now?
We've been affected slightly, not anything.
Not majorly.
Anything that would affect our ability to produce.
I know you can't speak on behalf of everybody, but you are president of the American Chamber of Business in this country as well. What is the general sense? Because in the news we're often talking about a breakdown in strong relations between government, business and labour. What is the general sense?
Well, there's a couple things that we're watching as the American Chamber of Commerce, and one of them is the immigration laws. The country has needed to tighten down for purposes of security and other things, and what that's done is it's hampered American business ability to bring in expats to train the locals. So what we try to do...
So it's actually hampering the transfer of skills.
The transfer of skills and the creation of good jobs held by South Africans. So that we're watching that very closely, and we're talking to the Department of Home Affairs. Also, some of the legislation around BBBEE, the Broad-Based Black Economic Empowerment, which is difficult for multinationals to manage because of the ownership component of it, and so we're watching that. We're watching some of the IP laws.
That won't change, presumably. Is this something that international business has accepted? You have to comply with our BEE laws.
Absolutely, but what it does hamper is the ability to export, because and we agree 100% with BBBEE. We agree with empowering people. We agree with creating good jobs for the whole population. And so we believe BBBEE is a good policy. We just don't understand why you need to connect it to ownership. But anything that makes it more difficult to do business in South Africa, like immigration laws, like logistics challenges, like power challenges, make it more expensive to do business here. And ultimately, if you want to export more, if you want to start cutting that current account deficit, you have to be globally competitive. You have to have the best product at the cheapest price in order for your export customers to want to buy from you. So we're working with government to make sure that not only is South Africa open for business, but it's also efficient and productive.
I think the last time we spoke, there was concern about the impact of strike action as well. And I want to know how you're feeling about labour relations. Germany is often held up as this example where manufacturers work very well with labour unions, co-determination, if you like. Is this something where manufacturers, even international manufacturers in this country, can start leading the way?
Yeah, I think what I'd tell you is, since the last time we talked, we've been doing a lot of work with our local employees at the Ford plants, and with our supplier employees, and we've created a partnership with them, and we include them in our business discussions and our strategic discussions, so they understand how they can participate in making the business more successful. And I think that's kind of taking the lead of what the UAW does in the United States and the Works Council does in Germany, is they participate with business because we have shared objectives, right? We both want to create more jobs. We both want to increase our production. And so it's just a matter of finding the common ground where we can work together in that direction.
How are you feeling about the overall manufacturing sector, even in car manufacturing? We assemble here. We're not huge makers of things in South Africa. There are calls for reindustrialization. Do you have an opinion on the big picture in our country?
Yeah, I think it's a little bit of a misnomer saying we just assemble here. Part of the APDP, the Automotive Production and Development Plan, which is a successor of the MIDP, the Motor Development and Industry Plan, is to create a depth in manufacturing. And what we've done here is we've now we've got over 60% local content. So we are, where we were just assemblers, they used to call it kit production, CKD, we are now what we call an IMF, an integrated manufacturing facility. And we have manufacturing expanding in South Africa to support our plant, and that's because of the way that the new policy was developed with minimum scale requirements. So you have to have 50,000 production in order to qualify for the incentives. And what that does is drives that localization and drives that manufacturing and creates jobs through all of the supply chain.
And can that accelerate presumably as well? And,
it is,
and we can get more and more depth.
It is accelerating. In fact, the government's target is to build over 1 million cars in South Africa by 2022, I think. And if we continue to move in the direction with accelerating production the way we have, all of the 7 OEMs, there's a real opportunity for us to do that. But we really need to continue working on the things you and I talked about a moment ago.
All right, so much potential. We just have to get there. Thank you so much for joining us. So that was Jeff Nemeth from the Ford Motor Company. Let's take a look at the numbers now. The party may be over as the price of oil is rebounding. That, in fact, helped some stocks on global markets today, and the JSE ending higher. Here's a look at your main financial indicators. Great to have you with us on Business Review. More after this short break.